That's Swiggy and expecting about a 5% uptick. 5% uptick on Swiggy's listing. Let's cut that audio, please. We don't need the audio of the lady, but we'll probably have a start which is about 5% higher. The question only is, can it build on from there or will it see some selling? Now, remember, the lot of talk is that Swiggy's valuations, and Samina is with me, that Swiggy's valuations are a lot more reasonable than Zomato, but Swiggy a few quarters away from profitability relative to Zomato.
Yeah, I think, so this lady's voice is okay, right? But yeah, 5%
I was not being sexist.
No, I'm joking. A 5% premium is actually better than what the expectation has been over the last couple of days. What also worth noting is that before they went to IPO, their unlisted trade, or the last trade that took place before they filed for the DRHP, is close to 420. So a good possibility that we may get a flat start and build on that as we go along through the day. But very significant marquee names have come in from what we understand. You had a couple of insurance companies. Norgis was one of the big guys that put money on Swiggy as well. So yeah, 390, 395 is what the expectation would be. It'd be interesting to see what Zomato is also getting up to as we see it. Flat start, as expected. 1% is what the market was expecting, and that's exactly where we are seeing Swiggy at 1.5% higher, bang in line with the grey market premium. So flat start, but I don't think it's complaint worthy. The broader sentiment of the market is weak. If you can pull up Zomato as well, let's just take a check of how that one is doing, because it's the only other listed player, and this industry member is a duopoly. So you want to keep in mind that Swiggy and Zomato will be fighting it tooth and nail for the rest of time till there's a new entrant in the business. That stock is down 1.5%. At 395, Niraj, in line, especially given that the excitement and euphoria was not so visible until the last day that the subscription closed out. But 390 is what we have on the screen. I think most investors would be rather pleased, because I think it will improve as we go along through the day, as long as the broader sentiment supports the street.
Yeah, so that could be one thing as well. The other thing is, I mean, relative between Swiggy and Zomato, now that it's a sector that has gotten formed, what happens next? Rahul Jain, Director Research at Dolat Capital, who looks at this very closely, joins in to talk about this and more. Rahul, really good having you, and thank you for taking the time out. Important day to have you. First, the obvious question, what do you make of the listing?
Yeah, I think what we saw of the valuation, and if we do a little bit of comparison of where it stacks up was in terms of fundamental versus valuation to Zomato, I think the valuation was pretty fairly priced, and that's why we could see that there's no much big swing at the listing. So that's what we were thinking, that what Swiggy is at this point and where Zomato is at this point, it may probably, one can think it's closer to 18 to 24 months behind Zomato's fundamental. And this is a similar valuation what Zomato was commanding that time. So I think that way it's very even Steven from a valuation point of view.
Rahul, sure, the valuations were compelling. Numbers as well, from what we understand, Swiggy is a few quarters out from where Zomato is, and that explains why this came in at a deep discount to Zomato. But is that the only reason or the only sort of justification for one to be constructive on Swiggy? Because discount apart, you also want to look at the business, you want to look at the cash flow, you want to look at where that money is going to be spent, right? Where do you feel that bias sits? And also in terms of market share, Zomato is leading with a little bit of market share on Swiggy.
Yeah, I think to your market share point, we have seen Zomato has gained significant market share in on the food side of the business in the last 3.5 years. Some bit of it has also been contributed from the brand appeal, which has improved significantly for Zomato post listing, and also because of its overall engagement. I think from a comparative perspective and cash flow and financial perspective, which you are saying, I think one way the valuation has an upside because of the fact that it's a very, very large time on the e-commerce or the quick commerce side, which is kind of a proven now. While the challenge now going forward would be the increased competition that we would see on the QC side. In fact, Swiggy, with now its much awaited IPO being done, may probably get more aggressive on the food side also to claw back some of the market share that it has lost. So I think we would see more competition going forward, better for consumer out here. And as a result, we see both the companies may not see a meaningful upside from where it is today. Rather, increased competition would slow down the EBITDA progress and probably would mean much lesser return going forward.
Well, if you had to put your money in today, where would you do it? Would you buy Swiggy or would you buy Zomato? What have you told your clients to do?
Or none of them.
Or neither. Yes, I guess Niraj wants to jump in with neither.
Yeah, I think thanks for adding the third option
Oh,
because it is
no.
basically in that camp. Of course, if you are a very, very, very long investor and you more care about time and opportunity and see how the decision making shift from the current consumer set to completely Gen Z ecosystem at some point of time, of course, these companies would do really, really well. Our view of not suggesting anybody to add at this point is, as I said earlier, the competitive landscape in this business, both on the food side, slightly and much more on the QC side, would play out over next 18 to 24 months, and that would mean there would be limited upside on the EBITDA. In fact, Street would see probably contraction to the current estimate. So that is what is making us slightly worried about this space. For a real long-term investor, of course, these are large time and good play to them.
Okay, so that's the verdict. Neither of the camps right now. Maybe so. Just before we wrap up, Rahul. And sorry if you already mentioned it, but just trying to understand. Assuming that other things remain the same, and assuming that the broader multiples for the markets remain the same as well, what levels or what valuations would you find comfort in buying them? Would it be 15-20% lower, assuming ceteris paribus other things remain the same? Would it be 25% lower, or would it be more?
If you look at the current operating profit of the business for Zomato, is still a small number compared to its valuation. It would sound 100 of X, right? So, and Swiggy is yet to get into that positive uh, annualized cash flow on the operating side. So, of course, the valuation 15% down, 20% down is not something which will become very mouth-watering. What we need to better gauge on that how just like how the food business eventually became like a duopoly, and there is a gradual pricing power that is getting played into it, as we see from platform fee getting increased every now and then, compensating for the increased delivery cost. I think we need to see that how in QC business also it would get stabilized. So since there is such a aggressive plan wherein companies are talking of doubling and tripling of the capacity, these are not easy ask where you double triple capacity and also want it to be efficiently run. So I think valuation would be more function of how the competitive landscape shape up, and pure correction by 10, 15, 20% would not make it an easy buy either.
Okay, well, difficult to call, but certainly not now. That's the verdict. Rahul, maybe in 3 months' time, we talk about this issue again. By then, maybe both of these might have traveled a fair bit. Whether up or down remains to be seen. But thanks for joining me today. Really appreciate your time. That's the view from Dolat Capital on Swiggy or Swiggy plus Zomato, and a tepid listing, not different anticipated per se, and expectedly so. The question is, Rahul is saying that you might not want to put in money even now, maybe wait for some more time or correction or both.